We're going to do a quick video on BMY, Bristol-Myers Squibb stock analysis. We've got a daily chart on here for you, and it's got a green 5-day, a red 20-day, and a blue 200-day moving average. And it looks like somebody took the stock out here this morning and shot it. So we'll get back to that in just a minute. Let's take a look and see what's been going on in the stock longer term. We had back in January of 2022 a challenge to the 200-day moving average with great respect to the 20-day, and we penetrated and managed to hold up and came from a bear market and start our bull market rally. We had great respect for the 20-day all the way from around the 64 mark all the way up to the $75 mark or so. Not a huge bull market rally, but a nice looking chart, at least during that phase. And then we went into distribution around 76 bucks, back and forth, oscillating above and below $76. You see that this distribution widened, and that's never a good sign, especially since it widened to the downside. And we oscillated within 12 bucks or so, 14 bucks or so, and then all of a sudden we widened that out and started oscillating a little more, but definitely with a lot more volatility. You see gaps through here, both to the downside and to the upside. Eventually, this battle has been fought, and eventually the bears are winning it, or have won it, at least in the short term. So we're seeing now a very ugly looking chart that is showing the beginnings of what could be a bear market. The 200-day is the blue, this 200-day moving average. There's no respect for the 20-day, no respect really for the 5-day. So those averages are kind of useless at this moment. The market essentially has been going sideways since April, with huge distribution across all the way up until just a couple days ago, the end of around August 22nd. That leads us to today, where we have this ridiculous sell-off. We have a gap of about, not a huge gap, it looks huge on the chart, but it's only $2 to $3. But we have a dramatic increase in volatility in the daily range. Again, not that big as far as stocks go, but for this stock, a $3 daily range is a lot of volatility. Typically, we probably see no more than $1. So 2.5 to 3 times the volatility increase. Everything looks exaggerated on this chart because we've been looking at some really volatile stocks lately. But I wouldn't describe this stock as volatile, but I would say it's volatile for itself, for its historic trading. The volatility is dramatically increased on this stock compared to itself. So what we have now is obviously a very serious violation of the 200-day moving average. I don't get into the fundamentals. There's probably something came out on this stock today. Believe it or not, I have not read the fundamentals at all because I really don't pay attention a huge amount to fundamentals on stocks. The charts tell us everything, and we don't really have to do a whole lot fundamentally, but there's always exceptions to that, and it looks like something came out today, but that's not really the issue. The issue is technically what is this stock doing, and it's violating its 200-day moving average, and if it continues on this path, this stock's going to turn into a bear market. From the looks of this stock, that's exactly what it looks like it's happening. For entertainment purposes only, my analysis of this, in my opinion, is that we're going to probably see a little bit more sell-off, not much, but a little bit, and then we'll get a rally back up to probably the low 70s. We will then catch up at some point with a declining 20-day moving average, and we'll bounce off of that. Assuming we do bounce off that, we'll go back down and have the stock will close again below the 200-day moving average and begin its formal bear market. Am I saying that's absolutely going to happen? No, but I'm saying that's what this chart suggests might happen. The alternative is that this is a false breakout to the downside, that it consolidates a little bit. It's going to have to consolidate, in my opinion, for a month roughly to recover from this drop off. So you're looking probably through September, you'll see some consolidation moves. They could be wild, they could be small. My guess with this stock is they wouldn't be huge, probably less than $10 swings. And then you would have to see what happens in terms of the oscillation around the 200-day moving average. My highest probability guess is that this stock's going to bounce around the 200-day moving average, but if it rallies, as I mentioned earlier, to the low 70s area, bounces off the bottom of the 20-day moving average to the downside, and then closes below the 200-day moving average again, then we're going to probably be in a bear market in this stock by the late September. So that's both sides of the analysis. Again, entertainment purposes only, and my opinion only. Let's take a look and see what RBAM Research says about this stock. We do cover it. Bristol-myers Squibb here. There's 1, 5, and 20-day entry prices here for entertainment purposes only. It looks like $70, $70, and $71. So let's go up and check and see if it's hit any of that today. August 29th. So it blew through some of those. We have a low of 66 and a high of $69. So let's go back down here and check it out. 66 to 69. So we blew through those entry prices. So if you were looking at these as entry points, you could have got your fills today on these. If you get in, the way these work, if you get in on a one-day entry, you'd look to close tomorrow, either end of trading day tomorrow, just before end of trading day, at a loss, or get out sooner with a profit. So this is take your profits as soon as you get them. If you do, close out at a loss. Worst case, 1 trading day, 5 trading days, 20 trading days, depending on the column you're in. So these are worst case holds, close out at a loss, or best case, if you get a profit, take it as soon as you get it. So again, today RBAM research is showing buying around the 70 level, and you have to see what happens. It's obviously blown through that. Let's take a look real quick and show you where you can get these. We have 190 stocks that we cover. You can get them all at rbamresearch.com. We currently have stocks, 190 stocks that are longs only for 1, 5, and 20-day holding periods. We also cover the major forex pairs, longs and shorts, crypto, long and short. We cover BTC, and the most liquid futures contracts, longs and shorts. They're all free, absolutely no credit card required, updated every weekday morning before 7 a.m. at rbamresearch.com. There's a link in the description below. And if you like this video, please click the like button. If you want to subscribe, please do that. If you want to leave a nice comment on how we can improve these videos, we'd love to hear it. And keep in mind, everything you've seen, including the entry prices, are for entertainment purposes only. All the commentary is for entertainment only and is our opinion. And you definitely trade at your own risk.